Now let's talk about what's making headlines right now and why this matters to investors like you. Iraq's Deputy Prime Minister and Foreign Minister Fuad Hussein has issued a serious warning. If the Strait of Hormuz were to be closed, oil prices could spike to anywhere between $200 and $300 per barrel. That kind of price surge could accelerate inflation worldwide and severely affect both oil exporting and oil importing nations, Iraq included. While Iraq may benefit in the short term from higher oil revenue, the global ripple effects would be damaging, especially to major economies like the United States. Gas prices would rise sharply, and global markets would feel the pressure almost immediately. Now, amidst these rising tensions, a narrative is spreading that former President Donald Trump is somehow delaying the revaluation, or RV, of the Iraqi dinar. Let's clear that up right away. This claim is false. Based on reliable sources, including a contact within the U.S. Treasury, this story is not only inaccurate but potentially being spread deliberately to create division and confusion within the dinar investor community. The truth is, Trump is not the individual in control of the RV's release. In fact, some of the misinformation appears to be traced back to a specific individual within the Treasury who has been known to share misleading or outright false information. The idea that Trump is holding things up is not only wrong, it's harmful to productive discussions happening among investors. There's more. A well-respected source who works closely with key members of the Chinese financial families, those who are providing the gold backing for a global currency reset, has shared that they are deeply hesitant to proceed with any major releases while Iran's current leadership is still in power. According to this source, the hesitation is directly tied to the gold treaty associated with the RV. This adds another layer of geopolitical complexity to an already sensitive situation, and it's something investors should be aware of as we move forward. In the middle of all this, there's a big announcement that has grabbed the attention of the community. Frank26, a longtime figure in the dinar world, has officially stated that the revaluation is now underway. This isn't just another rumor. Frank is pointing to real economic developments inside Iraq as evidence. According to him, the Iraqi government has taken decisive steps towards stabilizing their economy after years of challenges, and those efforts could lead to a stronger and more valuable dinar. Investors who have followed Frank26 for years know that while he is optimistic, he also tends to back up his claims with analysis and patterns in the market. So, what's giving credibility to this claim of an ongoing RV? Several things. First, the rising oil prices have a direct impact on Iraq's revenue. Since Iraq's economy relies heavily on oil exports, higher oil prices give the country greater financial strength, which can, in turn, support a stronger currency. Second, there's been a noticeable uptick in foreign investment interest in Iraq. As international companies and governments look at Iraq as a viable place to do business again, the demand for the dinar may increase, potentially boosting its value. These economic movements, combined with Iraq's efforts to modernize its banking infrastructure and economic policies, could signal that the conditions are aligning for a real shift in the value. This leads us to an important question. What should you do if you're interested in investing in the dinar? The first step is always to do your research. Look beyond the hype and rumors. Read up on credible sources, analyze the current global and regional market conditions, and consider viewpoints from multiple analysts. Frank26 is one such voice, but it's wise to balance what he says with broader market trends and official developments from Iraq. Next, speak with a qualified financial advisor, ideally someone with experience in foreign currencies or alternative investments. This kind of investment isn't right for everyone, and understanding your own financial goals and risk tolerance is critical. Make sure you're investing with a long-term perspective and aren't overexposing yourself to risk. Diversification is key. Don't put all your capital into one currency or opportunity. Spread it out in a way that protects you against sudden market shifts. And as with any volatile investment, timing matters. Watch the news. Stay in tune with investor forums, social media discussions, and currency-specific news channels. By staying informed, you give yourself the best chance to act quickly if and when a favorable opportunity arises. While we're focusing heavily on the dinar, let's not forget about another currency that's been generating buzz: the Vietnamese dong. There are increasing reports that U.S. banks may begin trading the dong more actively in the near future. The rates at banks might not be as favorable as those at redemption centers, but many believe the dong will hold a respectable value. While not as dramatic as the potential movement in the dinar, The dong is still considered by some to be a worthwhile addition to a diversified currency portfolio. What gives this rumor weight is the consistency in rates being reported across multiple platforms. A stable rate range suggests growing confidence in the dong's future, and that kind of stability can create a better environment for investors. One investor shared how holding on to his dong during a difficult financial time gave him the flexibility he needed when rates improved. That kind of story shows that while no investment is guaranteed, there can be real results when the timing aligns. It's also important to touch on redemption centers. These are specialized locations where investors may receive more favorable rates than traditional banks, especially when exchanging large sums. Being prepared, knowing the right time to go, and understanding the process can make a big difference. Timing your move well could significantly improve your outcome. Lastly, always evaluate the risks. Currency investing can be unpredictable. Rates can change daily or even hourly. That's why staying connected to trustworthy sources, speaking to your bank, and monitoring global events is essential. Even if the opportunity looks promising, don't move without a plan. Set aside a reasonable portion of your investment funds for this type of speculative opportunity, but don't let it dominate your entire strategy. To wrap things up, here's what we know. Frank26 has stated that the dinar revaluation is actively unfolding. Iraq's economy is showing signs of strengthening. Oil prices are rising, foreign investments are increasing, and there's growing interest in other currencies like the dong. But as always, no outcome is guaranteed. The best approach is to stay informed, stay cautious, and stay diversified. We'd love to hear your thoughts on this. Do you think this is the right time to invest in the dinar, or should we wait and see how things develop? Drop your comments below, share your experiences, and let's keep this conversation going. If you found this video helpful, give it a like, share it with others who may be interested in currency investing, and make sure you're subscribed so you never miss an update on what's happening in the global financial world. Thanks for watching, and remember, stay smart, stay strategic, and stay informed.